Hi folks, and welcome to the Meaningful Money Podcast. This is session number 369. This is the podcast dedicated to helping you put your finances in order. My name is Pete Matthew, and I'm going to share with you everything you need to know and everything you need to do to secure your financial future. I'm here to help you make sense of money. Hi, great to have you with me. Thanks for joining me once again. The world is pretty topsy-turvy right now, I'm sure you'll agree, and for many of us, we're experiencing the biggest and sharpest test of our investing resolve in light of what are incredibly volatile markets right now. But should we be doing anything in light of the circumstances we find ourselves in? What is the future likely to look like after all this is over? Well, today I'm bringing back Lars Kroijer to talk about what on earth is going on. So after my conversation with Lars, I'll look at a recent review that's been left, a quick announcement about Meaningful Academy, announce what we're going to be talking about next time. But before all that, remember, as ever, this podcast continues to be brought to you with the help of my friends at 7 Investment Management. They've been helping me out here for years, and I'm so grateful to them for doing so. So please do check out what they're up to. They're at 7im.co.uk. That's the number 7im.co.uk. Okay, I previously interviewed Lars Kroijer almost exactly a year ago, and his book, Investing Demystified, continues to be one of my absolute favorites on investing theory and practice. And my interview from last year continues to be really popular here on Meaningful Money. So I'll make sure there's a link to that in the show notes. But Lars is eminently qualified to talk about the state of the markets currently, the outlook for the future as far as we can know that, and what, if anything, crucially, we should do in light of it all. So I know you're going to enjoy my conversation with Lars today. Remember, notes and links from the conversation, anything that we talk about here today, are at the show notes for this episode. And this is the only link you need to remember, meaningfulmoney.tv/session369. Here's my conversation with Lars Kroijer. Lars, this is our second attempt at this. I'm very grateful to you for bearing with me through technology failures, and it's great to have you back on Meaningful Money. How are you doing? Are you keeping well in it all?
Yeah, very well. Well and healthy, and happy to be back. We'll do another one tomorrow if this one fails.
Bless you. You're very gracious. I'll be. My eyes will keep darting left just to make sure the recording light is still on. But I do appreciate it. Look, man. Obviously, these are weird times, and there's lots of questions going around in the Meaningful Money Facebook group, coming at me on email, and I'm sure you're getting lots of email questions as well. I think people are wondering less about doing something now. I imagine you've got a view on that, but how they might, once this is all sort of blown over, how they might need to perhaps rethink or reposition their investment approach. So I wonder whether you had any thoughts on what really this means for investors in the future.
Well, let me start with, I'm not necessarily agreeing with you that you shouldn't do anything now, because, I mean, the world has changed massively, right? And and we're obviously talking about the coronavirus, and this is April 7. And in the last 2 months, the world has become a very different place. The world is far more risky. The assets that we in the past considered absolutely safe assets, including some government bonds somewhere in the world, are less safe than they were. The outlook for risk for equities is highly uncertain. And I'm not saying, that it's also not entirely impossible that people's personal circumstances have changed materially. People may have lost their jobs. Their houses may be worth less. They may be facing a remortgaging that they can, or refinancing of some sort that they can't as easily face. And so I think it's important that at any one point in time, you take stock. So it's not that you can necessarily close your eyes and, hopefully this passes soon, but then come back in September and say, well, let's see where we are now. I think you have to do that at any point in time. I think a lot of interesting things have happened. Interesting in sort of almost an academic way here, but the one thing that's very clear is that correlation is massively off. Not just correlation between the various markets around the world, but correlations in our lives. Right, that it all fits together, and the thing that's happened that's impacted values in one part of our life has impacted values probably in all parts of our life. your house is probably worth less. Your job is less secure. Your future income is possibly down. And this happened at the same time and for the same reasons that your equity investments are down and down. And so we really have to think about correlation risk in a way that I think some people perhaps in the past haven't taken seriously enough. They've sort of put this in different buckets and said, well, they don't all go bad at the same time for the same reason. That's just not true. It has, right? So I disagree with the premise that we don't have to do anything. We at least have to think about things, and it's quite an individual thing.
That sort of ever-increasing correlation seems to be a sort of ongoing trend. You seem to hit people smack in the face in 2007, 8, 9, and it's definitely hitting people again. But what can people practically do about that? I mean, surely we get to the point where we run out of asset classes and we run out of things that we sort of assign our wealth to.
No, you're absolutely right. It's not that I have a magic asset class that no one's heard about. That's negative correlation, right? But I think what you can do is you can be very aware of it. And the fact that if you're aware of it and understand correlation risk, it should impact your overall risk tolerance. Right? If you think of, let's say you had 5 different buckets of wealth that were uncorrelated and had an expected return of 10% a year. Dream scenario here. Well, then in most cases, you would average 10 because some would go well and some would go poorly, but on average, they'd be average. In fact, if you had 1,000 at 10%, statistically, there would always be 10%, right? Now what we know is that you essentially have one. They're all the same. Because when the shit hits the fan, they all go the same direction. Now, so that means that in a scenario of someone who is naturally risk averse, which most people are, your downside happens more than you expect than it would if you don't expect correlation between assets. And what I mean by that is if you look at your overall, your saving for retirement or whatever you save for, well, if the buckets don't really correlate, then there's always going to be something that does well. And now I'm saying, and I'm very careful not sounding alarmist, but now I'm saying there's a higher likelihood that they all go badly at the same time. So that perhaps suggests that you should have less risk than you initially thought if you didn't take that into account.
Okay, so potentially there's a big impact of that. But again, risk is just a terribly badly defined word, I think, certainly by the industry. And I think most ordinary investors just consider risk to be the risk of loss, don't they? Advisors, very often we get fancy and say, well, actually, it's the risk of not achieving your goals. And I do buy into that. But at the same time, if you're not going to achieve your goals because of the way you've invested and the risk that you've taken, and if that somehow needs to change, then, the only thing really that's going to need to be reassessed is timeline to goals. Maybe we need to reassess our retirement goals and expect a little bit less when we get there. That's kind of the adult thing to do.
I think it's a super interesting topic because you're absolutely right. It's a risk of what, right? It's not the risk of some academic 3 standard deviation event, which most people don't even know what it means, right? It's a risk, let's say, of not achieving your goals. Well, what comes into that? Well, your future income, certainly a big part of achieving your goals if you have any income. Future inheritance, potentially, is a part of your lifetime planning. The value of your house and your potential to remortgage your house. If you lose your job, can you get another job? I mean, you have to look at all this holistically and then say, in the context of looking at all of these assets and liabilities in my life, in the context of my goals, what is my risk? What is my risk? And you can't put a number on it and say it's 7%. Right? It's 7.5% and 7.25% likelihood that I don't achieve my goals. Because then you get a false sense of security from an accuracy that simply isn't there. Now, there is no, I said before 3 standard deviations. That assumes, you remember from school one of these beautiful normal distribution curves. Well, there's one thing I tell you right now. Those curves exist only in the textbooks.
For sure.
It's more like this.
Yeah.
It's sort of fat tail. And so that's why I think, we can make these incredible mathematical models. And in fact, I think a lot of people in the world of finance make them mainly so they can charge a lot for them. But they give you a false sense of accuracy. And also because in the scenario where things are not going well, and we can talk about the coronavirus, at the end of the day, the markets are down, 30% or something? Since
something
35?
like that.
Yeah, who knows? Something like that. No, the world hasn't ended. In fact, I think the world has proved incredibly resilient. There's no one is saying the UK or US governments are going to go bust tomorrow. I mean, we ran out of toilet paper for a short while, but that's because of the idiots. But we got restocked really quick. So, we're certainly not in a doomsday scenario right now. But I do think we have to go back to saying, well, what if you're talking about risk and not achieving your goals? One of the reasons it's so hard to be accurate about it is we don't know the scenario where that happened. In this case, it was a horrible virus. Well, last time it was a real estate bubble that caused all sorts of other bubbles. And how it happens will impact your holistic, and when I say holistic, I mean all assets and liabilities in a different way. So you can't really put a number on it. So I think one thing where this is good is that I think it's helped people to understand risk and think about risk. There's some people I'm talking to where they think this is a huge blessing because they have all this cash sitting around that they were waiting to invest in. Now they get to buy things, half. And then there are other people that are basically saying, oh my God, I thought the thing was going to go up forever and now I can't afford this, that, or the other, right? So, how did this feel? Were you kept up at night for in fear of what the future holds? Well, then you're probably taking too much risk.
Talking of fear, the so-called fear gauge, the VIX index, is something that you've referred to in a YouTube video that you've put up recently. And how sort of useful is that? Is it a sort of thing that ordinary people need to take notice of, or is it something just for nerds?
Well, let me explain what it is first.
Yeah, do that.
It's a volatility index, right? So a volatility index, there's a market for the future risk of the market. So the way you do that is, imagine you have an option on the market. So basically the right to buy the market at a certain price at a certain point in the future. The value of that option depends on a number of things, one of which is the expected future risk of the market. So imagine you now have the price of this option. You can back into the implied volatility, so the implied risk of that option. So it's a real market, right? Because once you have the formula, it's called the Black-Scholes formula. Once you have that formula, you can say, well, what is the risk that is pricing in? And then you can say, well, how does that change over time? So the VIX index is a measure. That's what the VIX index is.
Okay.
Somewhat.
Yeah, that'll do for me.
But it's interesting that when you then look at before this all happened, we had some of the lowest risks ever, predicted future risks. So basically, it's like the market was saying there's no risk in the market. Now, of course, you shouldn't expect to get paid a lot for no risk. Right? Then what happens with this index is that it, I think, literally quintupled. It went from expect a forward-looking standard deviation, I think, at 12% to around 50%. Right? So again, don't read too much into the standard deviation numbers because there's lots of noise around that. But you have to know that as an investor. Well, probably not, because any newspaper you looked at or any media source you looked at, it's not like you weren't aware that the world had gotten riskier.
Yeah,
right?
sure.
The fact that you couldn't go outside your house is a pretty good indicator. Right? The world has changed. And so you don't need to know it, but you can. I mean, you can look it up on Google Finance or Yahoo Finance or any media. So it's just Google VIX, and there are lots of ways to trade it.
So a lot of people are asking what the likely impact will be of so much money being pumped into the system. I was just listening to the news this morning, and they were saying that the 80% of pay being given to employees who have been furloughed, no surprise, is 3 times what they were expecting it to be. They were, I think, expecting it to be a million people or something like that, and it's been 3 million or something, or they expected it to be 3 and now it's 9. It was 3 times anyway. It's going to cost them £40 billion over the next 12 weeks from here we are in sort of early April. That's an awful lot of new money into the system, isn't it? And a lot of people are wondering what might the impact of all this be in the medium to long term.
Well, there's no doubt this will change society and the world as we know it, for no other reason than there's a lot of bills that are going to have to be paid.
Yeah.
And we're talking about the UK, but again, most developed countries are doing some version of this, and rightfully so, right, to avoid a complete meltdown in society and making sure that people that are at a record rate are losing their jobs have a way of sustaining themselves. Right? I'm not saying it doesn't make sense, but clearly, when you go 2 years down the line where we've probably had a vaccine and hopefully this will be something that's passed, government debt ratios are going to have skyrocketed. We're talking the UK and the US, and we're probably two of the more robust societies, but you look at the worst number of deaths in the world is in Italy. Now, before all of this happened, Italy had a massive debt to GDP ratio. They were probably at that point somewhat struggling to pay their bills. Now the amount of money they have to pump into the system has increased dramatically. The health costs have gone up dramatically. And this, again, at the same time, for the same reason that the economy has gone to shit and their future tax receipts are in the dumpster. We're going to pay tax in Italy the next couple of years. No one's going to make any money, right? So at the end of all this, and I'm just using Italy as an example, it's equally true in Spain and probably many other places. At the end of all this, I think you're going to see that the impact will be that these incredibly important short-term measures have a cost. And one of the costs will be cross defaults, or defaults in certain places. It's not just companies, it's also countries. And unlike in the past where Greece defaulted, there wasn't, now Germany's doing pretty crap themselves. And so there isn't this, and people talk about the World Bank, but the World Bank is puny in the grand scheme of things. And besides, who's funding the World Bank? Right? So there isn't a magic wand here. And I think ultimately we're all going to have to pay a lot more in taxes. And not only is that going to bring its own set of issues with it, but it's also a lot harder than it was a generation ago to tax people. I mean, look at a guy like me. I'm not even British, right? You come and say, Lars, you're going to have to pay 85% in taxes the next 10 years. Well, unlike a generation ago, it's pretty easy for a lot of people to move abroad to places where they don't pay any tax. And that's true of individuals, but it's also true of corporations. If there's one thing we learned from this crisis is you can work from many places and certain right? So if you're charging people too much to sit in one country and work there, well, they're going to leave. And so I think taxation has gotten harder. And at the time where they're going to need to have taxation, massively taxation. Right? So I don't want to be a doomsayer. I do think we'll get through all of this because it's also brought us much closer together as a society. But there are massive issues.
For sure, and it sort of suggests against my sort of initial view when it sort of first really kicked off and markets went down so fast. My thought was, well, okay, maybe this is because this is sort of event driven. Like you say, nobody was expecting it. The VIX was pretty much all-time low. Nobody was planning or expecting this kind of risk. And because it was an event driven sort of decline in markets now we're talking, then I figured, well, maybe the recovery will be, if not equally as quick, fairly quick. But nobody knows, do they? I'd love to be able to offer some words of solace to people, but nobody knows. And I suppose we've got to...
of course, risk and return correlates, right? That's sort of the markets for you. But, at a higher risk level, which we have now, it's not unreasonable to expect higher returns. So if the VIX was at 12% and it's now at 40%, well, you should be compensated for that higher risk by reasonably expecting higher returns.
Given long enough.
Yeah, if you can tolerate the risk. Right? So if you have money to put in the markets now, yeah, I think you can expect to make more money, but you can also expect that it may go horribly wrong. you know, so
Yeah.
will it all bounce back? Well, I sure hope so, right? But we don't know. But if we wake up tomorrow and some brilliant scientist somewhere has come up with a vaccine, or sure enough turns out that 80% of us have already had it without knowing, there are many ways this can bounce back. I think that doesn't mean that the world won't change, because we'll have learned from what's happened. But actually, you could even come to see this as a good thing, that if this had happened 40 years ago, far, far more people would have died, and we would have been much slower to react. You saw the sequencing of, when the Chinese discovered this, they put the coronavirus, this is the DNA, I don't know the exact terms, but they put it up online so scientists around the world could start working on it within days. And I'm not saying the Chinese have been incredibly forthcoming about everything, but take that generation ago, and it would have been months before people, first of all, people couldn't have done it. Right? So we have gotten much better at addressing these things, and I think it's possible we come out of this saying, well, you know what, we came together as a society, but not only that, we were able to address it in an incredibly efficient way. And also, whatever we discover in one part of the world flies across the world in nanoseconds. Right? Whatever the solution is, we'll all know, in the afternoon. So I think there are a lot of positives from this, and it's not impossible to me that we go into a period of a very steep recovery. But I will say this: something like bankruptcies, corporate bankruptcies, they don't untangle. Like once a company goes bust, they don't go unbust. Right? They may continue to operate, but if British Airways goes bust, well, it doesn't mean that you can't go fly somewhere, but it does mean that if you're a shareholder of British Airways, you've gone to zero with no hope of it being worth anything other than zero. Right? So in that sense, there are triggers that don't get undone.
Well, interesting world it's going to be. I've sort of unshakable faith in human resilience. We've talked a little bit about that, and also our sort of unending propensity to want to buy stuff off each other. So, I'm hopeful that that there'll be, that things will return to some kind of normal, but it will be a different normal for sure. And but I like you, see a lot of positives in it, in the way that we've come together in sort of global cooperation and some of these things. So I choose to err on the positive side and hope that I'm not massively wrong.
Wait until they all over EU start asking you to be positive, but also a £10,000 check per person. We might have a slightly different perspective than.
For sure.
But in terms of social distancing and people reacting to that in the right way, I think it's been overall very, very encouraging. There's a video making the rounds. I live in London, and there's a video making the rounds very close to where I live of a lady that basically was refusing to get up from the bench she was sitting on in the park, and this very, very polite police officer gave her about 100 chances to basically say, "You need to go home. This isn't right." And she was, in a quite provocative way, saying, "I'm simply going to sit here until the sun goes down, and what are you going to do about it?" And so she was filming this, and it was really interesting to see, because and then she put it on YouTube saying, "Can you all believe I got arrested?" And the 99% reaction was, "What an idiot. Like, what are you doing? Like, we're all in this together, and you're being the idiot that's making it hard for everyone." Right? As opposed to, "Wow, I can't believe the police arrested."
Yeah.
Saying, good on them. Right? So there's this feeling that we all got to do our bit. And I think that's actually, speaking of which, can I do a small plug for this thing I've done?
100%.
So I've been involved with a charity for several years, and we put together a site called Act Local. So as an acting local, actlocal.co, where and we don't make any money from it, but where we basically allow local small businesses that are shut because of the virus, to pre-sell at a discount vouchers for future business. So imagine you have a restaurant that you can sell a £100 voucher for, say, £70 for when you reopen. There you go. Go check it out.
Yeah, cool. I'll make sure there's a link to that under the video and everywhere there needs to be. Lars, man, I'm so grateful again for you doing this on a version 2 after technology failed us, and I'm grateful for your insights. Where else can people find about more about what you're up to?
Well, so if you can spell my surname, I have a YouTube channel where I put on up some videos and about the coronavirus, but also investing in general. So that's a good place to start. I also have a website, but.
Cool. I'll make sure there's links to both of those. Once again, sir, you're a star. Really appreciate your time and your wisdom.
Happy to be here. It's a good to see you again.
Yeah, and you. Take care. Stay safe.
Thanks.
Okay, personally, I take a lot of comfort from that conversation. Hope you did too. There's lots, obviously, that we don't know about what the future holds, but there's still a lot to be grateful for, even in the current madness. And I don't think that our faith in human nature and in human resilience need be shaken too much. I do think that we need not to be hasty, but as ever, intentional in any decisions that we make and actions that we take regarding the makeup of our investment portfolio right now. So there's links to Lars's YouTube channel and his website at the show notes, meaningfulmoney.tv/session369 for that. Okay, here's a review from Q Susie 1970, headlined, "What a Great Guide, funny but based in the real world and doable." So thank you, Susie. I've meant to leave this review for some time. Meaningful Money is empowering for anyone who wants to take ownership of their financial future and gives direction and structure to that quest. I wish I'd known this stuff 20 years ago. Yeah, me too. And also the all-important investment behavior. I sold out my stocks and shares ISA at the first crash I experienced, and boy, do I regret that. Pete, thank you for your insightful episodes, which have given me a much-needed kick up the backside and insight into how all is not lost. I now have my laser focus and I'm experiencing the joyous feeling of seeing my unsecured debt shrink and the pay yourself first habit become second nature. Very cool. Thank you, Q Susie. If you like what you hear, then please do leave me a review. meaningfulmoney.tv/iTunes if that's your poison, if you're an Apple person. But wherever you're listening to this, just please leave me a review if you can, because it really helps, keeps me near the top of the rankings so more people can find out what we're doing and to subscribe. So thank you in advance for that. Okay, right now we are frantically working to get the Build Wealth phase of Meaningful Academy ready for launch on hopefully the 1st of May. That's the plan. So this is the phase that deals comprehensively with building an investment portfolio, planning which tax wrappers to use, provides access as well to the best financial planning tool in the world for consumers, which is called Voyant Go. And if you want to be at the start and to get the deepest discount there will ever be on the completed academy, then you've got to be on the mailing list. Okay, so head over to meaningfulacademy.com. Click at the top to show that you're interested in the Build Wealth phase. There's a yellow button up there that says specifically that you're interested in the Build Wealth phase, and then we'll be in touch in the run-up to launch day on the 1st of May. Fingers crossed. Okay, next time I'm going to be talking to a good friend of mine, a lady called Kathy Harrison, and her partner in crime, Joe Campbell. They are the creators of a fresh new sound, shall we say, in the financial podcast world called That Mint Podcast. I'm looking forward to bringing you that conversation next week. And that's it for this week's episode of the Meaningful Money Podcast. Hope that you enjoyed my conversation with Lars Kroijer. My thanks again to Lars for coming back on the show. Questions or comments, go to the show notes, meaningfulmoney.tv/session369. Okay, folks, hope you're staying safe and keeping well in it all. Thank you so much for continuing to listen. I'll talk to you next week. Cheers.